My name is Andrew Fake from Minds and Money, and hello and welcome to our Minds and Money 5 at 5 show, which today is sponsored by Quebec Precious Metals, Silver Range Resources, and Roscan Gold, and is brought to you in association with Resource Global Network. For those of you attending 5 at 5 the first time, the aim of 5 at 5, 5 guests at 5 p.m., is to maintain engagement between investors and miners through a lively, interactive format whilst we await the return of physical events. A few admin announcements before we start. To make it as interactive as possible, please have your video screens switched on. And then if you'd like to ask a question, you can either ask a question in the chat box below, and you'll see a couple of people have already started to place some chat messages there, or you can even wave your hand virtually. I will then unmute you and you can go and ask your question live. We'll also be having polling questions throughout the webinar where you can go and vote. And again, invite you to go and relax. If you've got a glass of wine or beer, invite you to sort of please sort of have a drink whilst we're having our sort of virtual chat. We've got a great lineup of guests for this week. We've got Champigny, Chief Executive Officer of Quebec Precious Metals, Keith Spence, President of Global Mining Capital Corp, Caroline Donally, Managing Partner of Sprott Resource Streaming and Royalty. We have Mike Power, President, Chief Executive Officer of Silver Range Resources, and Nana Bompeh Sangmuah, President and Chief Executive Officer of Roscan Gold. And today's host is Richard Morrow, Equity Partner at E&L&C Baillieu, and also Chairman of the Melbourne Mining Club. Over to you, Richard.
Many thanks, Andrew. Thank you for joining. Beautiful morning in downtown Melbourne. It's a truly international event we've got here for us today. Guests from all over many great cities, and it says a lot about the international area of mining and mining investment. So, welcome to all our guests. The Melbourne Mining Club is absolutely delighted to be involved with this truly global 5 at 5, and what a great topic, and what a great series of guests we've got here. 3 TSX precious metals companies with us today. But before we get to them, let's set the cat amongst the pigeons here and start off with a polling question. We love our polling questions. And this is bound to cause some controversy and to get those 5 at 5 juices flowing. We're a very democratic bunch here, so I need you out there voting. No hanging chads, and no votes from people who are deceased, please, if I could make sure you're alive if you're voting. And here are the choices. Which of the following statements do you think is most likely to be true in 2021? Gold will outperform silver. Silver will outperform gold. Bitcoin. What's Bitcoin? Bitcoin will outperform both silver and gold. How did that Bitcoin get there, Andrew? Both gold will outperform Bitcoin. And what's this last one? England will regain the ashes. Oh, no hope of that. No hope at all. I'm going to go with silver outperforming gold. You've got to click on the screen to vote, and I'll be doing that in just a second. But before we do that, let's hear from our panelists and see what they think on this, and some opening thoughts. Keith Spence from Global Mining Capital is in Toronto. Welcome to the panel. You see a lot of projects coming past your desk, but how would you vote on this important question there, Keith?
Well, everybody knows I'm a gold bug, but I have to face reality. I think silver will outperform gold. Silver tends to lag gold when gold is the leader, and it lags quite a bit. But when gold prices increase, silver tends to outperform and tend to leapfrog gold considerably. So the question is, what do we think about gold? What's in store for gold? Where we see the future for gold? And I'm quite bullish, notwithstanding the recent pullback. And I've written about my 6 cylinders, which I think gold has been firing on and will continue to fire in the next year or two, and certainly in the long term. I'll just summarize them. Number 1, the US dollar. So goes the US dollar. If the US dollar is the alternative to gold, if the US dollar weakens, gold will do well. There's a lot of signs, the U.S. The spending almost $2 trillion for COVID relief. There's a lot of proposed spending for the Green New Deal, and the U.S. debt and deficit is quite high. So longer term, I see gold be outperforming the US dollar. Number two, interest rates. Interest rates are near zero, and it's likely to remain low. If interest rates are low, the cost of holding gold, the opportunity cost, is not high. Number three, geopolitical. I spent a lot of time in China, and most of our investments and partners are China-based. I think that's the big elephant in the room. The Biden government is more lenient towards China, but all the policies with respect to the protectionism, trade barriers, etc., some elements of it will be maintained. I would see Biden's policy as being what I call light Trump. It will be Trump with a soft gloves. Traditional supply and demand. Number four. Supply. Let's take number four. Demand. Once the economy rebounds, there will be considerable amount of pent-up demand for gold. In India, there's during the wedding season, there's a huge demand for gold, and there hasn't been a lot of weddings in India. And in Asia, and particularly in China, there's going to be considerable demand for gold when COVID is in the rearview mirror. So on the demand side, I'm only talking about classic demand here. I'm not talking about investment demand. I'm talking about the jewelry demand, but also investment demand, particularly in Asia. Supply. We know in the last few decades, particularly in the last couple of decades, exploration finds have not been as successful as previously. So we're having a potential shortage of new projects coming on stream that will supply the amount of gold required for the demand. There's a lot of exploration, and of course that will supply the demand for gold in the future. But in the near term, that's not going to be sufficient.
And can I sort of stop you there, Keith? Can you keep the last two cylinders up your sleeve, and we'll move on if that's okay. Thank you very much for that. Just to keep those last two, we'll come back to you on that.
Okay, all right.
I just want to move on to Caroline now. Caroline, which way are you voting and why?
So I'm tempted to vote that England will regain the Ashes, only because I'm not sure anybody else really in this group might have a view on it. But I think let's stick to the topic at hand. I'm a big believer that gold's going to outperform silver over the next year, and a variety of reasons that Keith has mentioned. And I suppose one, which is I'd like to talk my own book, and having just recently joined Sprott Streaming and Royalty, a large portion of our focus is gold. We already have gold deals on the book. So if gold is going to run this year, personally, that would be great for me. So I'm voting for gold will outperform silver.
Thank you very much. Mike Powell from Silver Range. You're in the Yukon right there at the moment. Does that mean that you might go for gold?
Well, I got kids, so I'm going to vote against Bitcoin. So how about that?
Kids will hate you. Yeah. Okay, so gold and silver will outperform Bitcoin. Yeah. Nana Sangmuah from Roscan Gold. You're in Toronto there. Which way would you vote?
I think it's all tipped in the favor of gold right now. I think we've seen massive stimulus packages that's coming through globally, and that's going to have an impact on inflation further down the road. And we will see inflation hedge demand come through, and that's going to be very supportive of gold prices. The other thing too that is going to be here to stay is the central banks can afford to hike interest rates. So you're going to have a double whammy, high inflation. So real interest rates are going to be in the negative territory, which is very supportive for higher gold price. And I mean, if history is anything to look forward to, I mean, basically anytime there's been massive stimulus packages, you've seen the gold price take off. I think ultimately silver would catch up, but in 2021, I think is probably going to see a lot more shine in the gold.
Thanks, Geez, gold's getting its nose in front here at the moment. So that's good. Before we go to our last speaker there, don't forget to get your votes in. We want to see which way everyone out there is voting. So click that button there. And finally, Norman Champigny, you're in from Quebec Precious Metals. You're in Montreal. We love Montreal as a town. What do you think? Which way would you vote?
Of course, we're looking for gold. We are in the process of finding a major gold resource. We like gold. We think it's a great commodity, and it will be stay like that for some time. Having said that, I would agree with some of the Keith's comments and other comments that at some point we'll see silver making a run. Is it going to be this year? Maybe. So I'm speculating it could be this year, but I could be wrong.
Good on you. Thank you very much. How's those votes looking there, Andrew? Are we?
I think we can have the poll up. I think it was 99% for England will go and regain the Ashes. Oh no, it wasn't. Sorry. No, it was silver will outperform gold. Sorry, I stand.
That's the way. Nice work, team. We like that. Thank you very much for that. We love a 5 at 5 poll. All right. So let's move on now. We've got some great companies to hear from. I want to first hear from Quebec Precious Metals. It's listed, of course, on TSX.V. Norman Champigny is a geological engineer with extensive experience with both public and private companies, both domestically and internationally. And he's currently also a director of Bompeh Resources. He has been involved in many facets of the mining industry, including engineering, project evaluation, and project management. Norman, over to you.
Thank you, Richard. Welcome, everyone. It's a pleasure to be here at this 5 to 5 event. I wish I would have a glass of wine with me, but it's too early and I'm speaking. Our company was created back in 2018 to find the next gold mine in the James-V region. And this was done through the adoption of a gold consolidation strategy combining gold assets from 2 existing companies, TSX.V listed, plus gold assets from a 3rd company. In doing that, we established a highly prospective land package in a James Bay area, which is the new emerging gold mining area of the province of Quebec. This allowed us to also have 100% interest in the Sangmuah project, our flagship project, where since that time we've been drilling, doing work to advance this project to the mineral resource estimate stage. Our goal is to identify 2 million ounces. This is what you need in that part of the world. And then to attract a company that's interested to develop and mine this gold. Our shareholder base is solid. We have as our most significant shareholder Newmont. Can I go back, please? Which prior to that was Gold Corp. They run the Eleanor mine, which was discovered by a company called Virginia back in 2004 and sold for $500 million. We have a proven management team and board, and we've done 2 fundraisings since the creation of the company. One at the start when we created the company, and one at the end of 2019, totaling $12.4 million. Next slide. Share structure is shown here, 67 million shares. We have a market cap of 15 million. The key shareholders are Newmont, as mentioned, Quebec Institution, one of Canada's largest pension fund, Caisse de Dépôt, has 13%, management and board of directors 5%, and our president is involved with P Partners, and his fund has 3.7%. Next slide, please. James Bay is in northern Quebec. It's characterized by an area which has good infrastructure due to hydro dam development by Hydro-Quebec in the 70s. The First Nation that's there is the Cree Nation. They are very much pro-mining. They have established 3 economic development agreements with the province of Quebec. The last one was signed in 2020. Our flagship project is Sangmuah, shown here, about 90 kilometers from the Eleanor mine, and we have also other projects shown in green. I will highlight the Elmer East project, where we have done work that has come up with a new surface discovery just east of Azimuth's Pat1 prospect discovery announced in early 2020. On the right, you see the size of the area called EU Ishchi James Bay. It's about 60% of the surface area of France. As I mentioned, this is Abitibi 100 years ago. This is a new area, new frontier, lots of gold to be found. We also have a non-core asset that have come part of this transaction that we are monetizing. And one of them is shown here, which is a rare earth project with a feasibility study, and we have 68% interest in that. Next slide, please. Looking at a Google Earth image to give you an appreciation of the landscape there. James Bay Road on the left is actually a paved road. Hydropower lines are shown in purple. The access road that we use in the winter to carry our supplies and equipment to do our work on the La Pointe area on our Sangmuah project is shown here. It's a 47-kilometer road. This allows us to explore at low cost all year round with little use of helicopters. I want to highlight again the location of the First Nation communities in the area, and we have established a very good relationship with this community, and it's critical to advance your projects in James Bay. Next one, please. So looking at some geology, this is an air mag survey that was done over the years in the area, which shows a prominent feature, which is a contact between 2 geological provinces, and you find gold showings, high-grade showings all along that contact. It's 23 kilometers long on our project, which is equivalent to have the control of the Val d'Or mining camp, a major mining camp in Quebec and in Eastern Canada. We have been focusing on 13-kilometer strike length along that contact, and particularly in the area within the red rectangle shown here, where the La Pointe and La Pointe extension deposit and mineralized area is. Next slide, please. Looking at a perspective view of this La Pointe area, we got a 950 meter strike length for La Pointe, about 2,500 meters for La Pointe extension, which is a new discovery announced in 2020. We believe, based on work we've done in the form of soil sampling and also geophysics on surface, it will expand to 3,500 meters. Earlier today, we had a press release announcing our plans for this year and summarizing what we've done last year. And our intent is to connect all of that to identify our 2 million ounce resource. Next slide. Some of the key intersections that we have, drill hole intersections at La Pointe deposit and La Pointe extension. The host rock is a silicified paranite. You can trace it from hole to hole. Grades vary from a few grams up to 10, 11 grams, width from a few meters to up to 100 meters, but it is traceable and it's easy to recognize in drill core. Next slide, please. If you look at a below surface view, look at contour of the grade thickness or metal factor, you can see the areas which are richest and thickest. And you can see also the areas that are open, and they are open. And we're going to be drilling that in 2021 with a 14,000 meter program that will be carried out in the winter and the first part of the summer. Next slide, please. A few words on Elmer East. This is a surface discovery that was done last summer. This is an helicopter view of the surface outcrop, never been found before. We have not only gold, but also copper, lead, zinc. We went back and did some channel sampling, which showed promising value. And we'll be doing some more work this summer after the snow melts to identify the best target areas to eventually drill. Next slide, please. So why invest in QPM? We have timely exploration drill results. We've shown that since the creation of the company. Sangmuah is advancing rapidly to the mineral resource estimation stage. We have significant potential for additional discoveries. under large land package around the Eleanor mine. We have strategic investors in the form of Newmont and Quebec institutions. We have a good team and board. We have money, and we have the ability to raise capital. Thank you.
Norman, thank you. Thank you very much for that presentation. Looks like you've got some interesting ground there. Caroline Donally from Sprott Royalty and Streaming. Maybe $15 million is maybe not big enough for you to look at, or is it? Have you got a question for Norman?
Yeah, I think, Normand, you mentioned your plans for the next year. You know, given that this is such and expected to be such a large target, what are you thinking really long term with this asset?
Long term is to have 2 million ounces or plus and sell it to a major mining company. That's the plan.
Right.
That's that's a very very good plan to have there on that one. If I could also throw to Keith Spence from Global Mining Capital. Keith, have you got a question for Norman?
Hi, Norm. I know this is quite an interesting project, but it seems to be quite large and still, in my opinion, looks very much regional. When are you hoping to really bring it down to bite size? And what's your plans for moving to the next stage? Maybe pre-feasibility or
we have no we have no intention of doing a pre-feasibility study. Our goal is to identify 2 million ounces. The area that I've outlined there has been subject to about 40,000 meters of drilling. We're going to do 14,000 meters of drilling this year. I believe that's sufficient to confirm the presence of a potential resource or reserve of 2 million ounces. The project is very large. You're absolutely right. So there's lots of areas to target, but we've been focusing on this La Pointe area where with drilling, we keep hitting the mineralized system and it grows. At one point, we will say, well, that's good enough to make it attractive to a major mining company.
And just a quick other question. I suspect you have the various Quebec Inc. investment houses as investors in your company?
Yes, as shown on the slide, we have the Caisse de Dépôt, we have Sidex, and we have also Investment Quebec. And they are very supportive. They take a long-term view. They also believe that they want to help with consolidation of junior companies. And we're looking at that possibility as well in the James Bay and elsewhere in Quebec.
Norman, I see you have Nuance there as a shareholder. Are you seeing, just as a general comment, that larger companies are using, companies like yours that really put a lot of money into the ground and can do things a lot cheaper than they are? Are bigger companies using little companies to be pathfinders for them for their next projects?
Certainly, when we approached Gold Corp to help us create this company, that was exactly the approach. The ability that juniors could be more efficient, more agile, and be doing exploration a lot faster than they can in known camps where they are present. So they rely on juniors to do that and take the upfront risk, the geological risk.
And did the merger between Gold Corp and Newmont cause any change in the relationship, or is it? The
relationship is very good. As part of the transaction, they have the right to a technical committee. We meet every 3 months to review the results, plan the next phase of work. So, and they are still the same shareholder than they were at the beginning. They've invested also at the end of 2019 to support our exploration efforts.
That's a fantastic vote of confidence. Thank you very much, Norman. We'll don't go away. We'll might come back to you a little bit later on all these things. But thank you very much for that presentation.
Thank you, Richard.
Is from Silver Range Resources. Mike Power has over 30 years' experience in the mineral exploration industry. He holds a Bachelor's of Science in Geology and a Master's of Science in Geophysics from the University of Alberta. He worked for 23 years as a contract exploration geophysicist and geologist, mostly in Northern Canada and Alaska. He was a founding partner of Aurora Geosciences Limited and vice president until 2010, when he stepped aside to set up an associated private prospect generator, Pownark Resources Limited. Pownark built a portfolio of gold and silver projects in northern Canada and Nevada. And in 2016, he vended these into Silver Range Resources and took over as president and CEO. Since then, he's assembled one of the largest portfolios of gold and silver projects held by a TSX Venture listed project generator. Mike, let's hear a little bit more about Silver Range.
Sure, thanks, Richard. I don't have any slides, so I'll just give you the rundown. So we are a prospect generator. Our focus is on high-grade gold and silver projects. Our target threshold is 5 grams a ton gold or gold equivalent. We don't look at targets less than that. We want to see surface mineralization of that grade at surface. We want to see a deposit, the possibilities of a deposit in that class. We work in northern Canada and Nevada. We have a few legacy projects in the Yukon, but primarily we work in the Northwest Territories and Nunavut. But our majority of our land holdings actually in Nevada, where we've got 23 projects. We've got 10 of our portfolio of 43 announced projects are optioned, and other people are working on them. One has moved to the stage of a royalty. Actually 2 have. And we're aggressively trying to put the rest of our projects in good hands to see them drilled, leverages shareholders' equity. We run a very tight ship. Our view is a well-fed dog don't hunt. So our G&A, I think, is arguably amongst the lowest in the business. We reinvest what we earn from our options in exploration to develop new projects, advance our existing projects. We're currently cash flow positive. In terms of projects that might be, knock them out of the park, we have an interesting project on the Arctic coast, Tree River. It's a Pilbara or Witwatersrand lookalike. It's a Archean conglomerate dated at 2.9 GA. It hosts gold throughout its length. We've got 7 kilometers of it. Averages about 0.1, 0.2 grams in any sample you take there, and we've taken panel samples up to 36 grams from large panel samples from it. It's about 10 to 20 meters thick, and interestingly, last fall, discovery was announced of diamonds in the same conglomerate, which is really unusual. Might be an ideal destination for a couple looking for a wedding ring, but it's we have splashy high-grade gold, and they found octahedral diamonds. They took 2 10-kilogram samples and found 3 diamonds in that. So it's kind of an interesting project, and it's comparable to Novo's, Pilbara projects and to the Rand. So that's one flagship project, I guess. And another we have is a large land position joining Sabina Gold and Silver's Back River project. We have 5 projects there that cover all of the significant gold showings between the Back River project and the Lupin mine. So if you know that neck of the woods well, that's over 100 miles, and it basically gives us a good footprint, and we're hoping for developments at Sabina. Rest of our projects moving along. We have projects near large gold camps down in Nevada, and we're aggressively looking for new partners. We have got 82 million shares out, 92 million fully diluted, market cap's around 20. Over 50% of the shares are held by either management or big investors, so that there's not a great float. And we're going about the business. Hopefully we'll find one that we knock it out of the park and move ourselves up a niche or 2 in the league. So that's the Silver Range story.
Wow, it's an exciting bunch of projects, and that I like that hungry wolf analogy there. That's very, very good. Keith, can I throw to you for a question here for our speaker?
Mark, just a couple of quick questions. The first question is, are you a silver company or a gold company? I wasn't sure.
Well, that's a good question. Yeah.
You're talking about Lupin mine, and you're talking about other gold-related assets, but are you planning to change?
No.
Company or what are you? What kind of animal?
We are a gold company, but Silver Range was spun out of Strategic Metals back in 2010 to explore the Silver Range project. They defined a resource there, about 35 million ounces of silver and lots of lead and zinc. It's near Faro in the Yukon, but the project kind of went dormant. And then I came along with a bundle of other projects, and they decided to repurpose the company back in 2016. So then I threw them in. I like the name. The other problem I got is that if you come from up north, Gold Range is a bad name because it's the toughest bar in Yellowknife. So I didn't want to be known as Gold Range Resources. So.
That's the all-important one. Yeah.
Okay, and the second question, you seem to me to be what the classic project generator. Is that your model, and is the intent is to find something and as you find it, farm it out to somebody else?
Absolutely. Unless it looks so good that we just, had to do it ourselves, we'll stick to the prospect generator model. That's our stock and trade. That's what we do. So if you bet on us, you're betting on a prospect generator.
Okay.
Well, Caroline, the prospect generator model is certainly developing some great opportunities for streaming and royalty deals later down the track. But is this a bit early for you guys to look at? And have you got a question further there for Keith?
Yes, unfortunately, it would be a little early for us, given our target area, which tends to be closer to production. We're looking for things which are no more than 3 years out from production. So I think, unfortunately, Mike, it probably would be a little early. Tell me, and for those of us who aren't as familiar with the prospect generator model, like, how do you actually make money in this model? And what do you need to do in order to move the share price? Those to me seem to be the two big issues here and big questions.
Right. I heard David Cole at EMX call prospect generators the get rich slow program, but I hope it can go a little faster. So it starts with, number one, when your prospect generator starts to generate enough cash internally that it's not going back to the market and continually doing raises. So that's your first step. When the thing becomes self-financing, then you need to build a large portfolio. We all know the odds of finding a gold deposit are, worse than 1 in 1,000. When you start to put together a portfolio of 40 or 50 projects, now suddenly you're getting down to the level of a street bet in roulette, where you bet on two squares. And so your odds of finding something start to improve, provided you've got decent prospects. If you get other people working on them, I think that's the key thing, I think, in a prospect generator. You've got to get those projects out there and sold. And I think that should be a metric. That's one we use. So I'm talking my own book, but I think that's got to be the business model. You get other people using their money, so you're leveraging what little capital you put into a project, and they're doing the heavy lifting. And then, it depends on your view of exploration. If you think you can outsmart a rock, prospect generators aren't the way to go. But if you want to bet stochastically, maybe a prospect generator is a way of hedging your bets, and ultimately one pays off. We live in hope, and we work at it.
Right. And then I think you mentioned, sorry, Richard, you mentioned something about a royalty. So where does that fit in? I think you said one of them was at a royalty stage.
Yeah, one's converted to I think with two could be safely said it can be converted with a royalty with sweeteners if in the event of certain, asteroid hits Earth events. So that we have a couple where we've got significant royalties on the property. And our model in vending a property is always to preserve a royalty. Generally, we want to see a success fee. We have an improving market, so we usually only sell 75% of a project. So you got a bit of retained interest there that can be bought down or out. And then the option proceeds fund our ongoing exploration. And that's the business model. So we have a couple of royalties, and I can never figure out the difference between a prospect generator and a royalty streaming company. Sometimes it just seems to be royalty streamers seem to work out of the office with big checkbooks, and we've got tighter budgets and have to use rock hammers. I don't mean to be disparaging, but I just have a hard time with the whole understanding the difference between some of them, particularly at the lower end of the market.
I guess that's one of the fascinating things about the development of the precious metals equity and funding markets over the last, say, decade or so. It has been the proliferation of different funding models. I guess we get there in the end, but Mike, how far do you advance a project before you call in others or maybe put the project out for tender for other interests? I mean, you get it to just past the geophysics stage? Do you get it drill ready? What do you like to do? Is there any sort of cut and dried formula?
Well, one of our operating commandments is "Thou shalt not drill." So we generally try and take the project up to the drill stage and have a clear, compelling drill target, an opportunity, not a problem, and then try our damnedest to sell it. And in this business, no matter what level you're at, selling is always the hardest part of the job. And we've just decided that's the level we'll do it, and then we try and move them out, and that allows us to leverage a smaller investment to generate potentially a bigger return. It also lowers the burden on because you've got less sunk cost. It lowers the burden when you go into doing an option agreement. It gives you a little more flexibility, and you can spread your limited resources on more projects. So that's the rule we follow.
Just
yeah, we've definitely heard that many a good prospect has been killed by drilling it. So in that phase, Keith, sorry, I interrupted.
I was about to say the same thing. Don't spoil a good project by drilling it. Exactly what you said.
Great minds think alike, Keith.
Yeah. Exactly. Just one quick question, Mike. I think that you made an interesting point where basically you are a micro royalty company. So do you see a lot of royalty type companies coming to you to buy those royalties? Do you see that as another way of making money?
Well, we haven't had any approach us. We generally just, we deal with conventional options. There's more upside for us. I mean, we'd talk to somebody if they came and wanted to buy a royalty, but it's probably not a good fit until we've got an option that's, into the 4th or 5th year, and it looks like, okay, this thing's really got legs under it. At that point, the option or the royalty might be worth something that a royalty streamer might be willing to write a big check for. But in the interim, we haven't had that kind of business.
I see some questions coming here on the chat page, but I'll tell you what, we might even refer them to Mike a bit later on, but that's good. I got one more question, just as an overall comment, Mike. How are you feeling? What's your comment on the hunger for bigger companies for new projects and new ideas? How would you comment on that?
I think there's still, well, I can only speak to the areas I work. And, the Nevada Gold merger has definitely dampened some of the big company competition. You only got one hand clapping down there. Some of the other big companies seem to have gotten a little more risk averse after COVID. Maybe they have so many protocols or whatever. We haven't had, the phone ringing off our hook from them, but a lot of juniors and a lot of people starting up new companies, moving into the market, have been approaching us. I would say last summer when silver spiked, we had a bunch of projects which have high silver. Our rule, as I said, is 5 grams gold. That translates into 500 grams silver. So if we have a project with 500 grams silver, we'll hang on to it and work on it. And all of a sudden in June, the phone started ringing and people started contacting us about silver. But once again, none of the majors. I haven't seen them really sniffing around too hard. I don't think they're hungry enough yet.
I'm hearing you. Look, thank you very much, Mike Powell from Silver Range in the Yukon. Really appreciate that. And now, if I can, I'll move on to our final speaker here today, Roscan Gold Corporation, African-focused, listed on the TSX.V, and we have Nana Sangmuah representing the company today, and has over 20 years of international mining experience, and provides Roscan with strong leadership skills and an extensive knowledge of the mining exploration industry and capital markets. Most recently, Nana was Managing Director, Equity Research, Metals and Mining for Claris Securities, where he successfully transitioned Claris to becoming one of the leading mining finance institutions. attracting institutional capital funds into a number of West African mining companies, and some big names here: Endeavour Mining, Semafo, Asanko, Cardinal Resources, rest in peace, Perseus Mining, Golden Star Resources. Nana, let's hear about Roscan.
Thanks a lot. And Roscan is a junior exploration company with an asset in southwest Mali. And essentially, we are in the company of a lot of prolific producers. Gold right now, Barrick and B2 Gold. And it's in a part of Mali that's not seeing any jihadist activity for several decades. So always when Mali comes up, that's the first question. I've been to site several times, slept at camp, never felt threatened. And it's a very prolific region, and we continue to focus on building a district scale mining camp. And I think we have in some good sectors so far. So the slide sort of talks about the achievement in 2020. We started with one discovery, and that's early in the year, and we ended with 4 discovery, specifically establishing the camp scale potential on the property. We think our performance in 2020 was mainly predicated on one discovery, which we had drilled out extensively, which is the Mankuki South. The 3 later discoveries were at the tail end of the year. And this year, we would be showcasing the roots of that new discoveries. And I think that should create excitement for the stock in 2021. So the growth from a 50 million market cap to about 100 million is just predicated on one, and we're finding more, and we'll talk about that in the presentation. If I could have the next slide, please. So the blue outline highlights our tenement packages, and we've actually pulled significant land holdings in a very prolific district surrounded by existing producers. It's actually one of the larger accumulation of land packages in that district. So we're very confident that we can translate this into significant ounce potential as we deliver. This camp has actually delineated over 50 million ounces, delineated and produced, but most of it has been on the Senegal-Mali share zone, which splays of it has yielded the Lulu, Gwankoto, Fekola, and Boto resources and projects. Thinking was, as you went further east, you've actually out of the first order structures and you into basement rocks. But we've proven that as wrong because we've discovered another first order structure and it's already showing and yielding very prolific results. And place of that structure is yielding discoveries like Sarabaya south of us, Mankuki South on our property, Kabaya on our property, Walia on our property, and leading into Serco on our neighbor's property in Oko. If we could flip to the next slide, please. So in the beginning of 2020, this is what we outlined to the market, 10 priority targets. By the end of 2020, we had converted 4 of these targets into discoveries. I think there are 2 projects that are well advanced that we are focusing on towards a resource delineation by Q4 2021. And the recent discoveries that we found, we currently drilling them, and it's getting exciting as we extend mineralization at depth. We've taken the time to understand the size and the dimensions and grade, and we'll be daylighting that into the market. So these are catalysts that are not yet priced into the stock, and we believe that as we showcase that, we should see some momentum building going forward. So clearly, this is a mining camp. There's lots of targets here. It's like a kid in a candy store. And we got to be disciplined in our approach in terms of unlocking value here. So most of these targets were predominantly discovered from geophysics and termite anomalies, which is all superficial prospecting techniques to pick up surface expressions of big deposits. And by the inclusion of some more experienced geologists with good experience in that part of the world, we threw on a geophysical survey as well. And that was to make sure that some deep-seated targets are also picked up. And early readings from the geophysics survey that's been completed is pointing into some deep conductors up to about 1 kilometer. So if you layer on the fact that for our advanced targets, which is Mankuki South and now Kabaya, which I'll talk a little bit more about, we are only testing to about 200-meter maximum vertical depth. There could be a lot of potential to add significant ounces in this camp. So we're very excited about the potential, and we added a 6th rig that could go as deep as over 1 kilometer in depth. And this year could be exciting times as we advance all these targets. Will you please advance to the next slide? So this is basically the old geophysics that was done in the region that is showcasing the magnetic signatures, which is associated with the gold mineralization we've discovered so far. If you look early this year, we announced the addition of Mankuki West, which was critical because our initial discovery, Mankuki South, shown at the bottom of the slide, had a bit of a sinistral offset to the west, and that land was really critical to have. And you can see the geophysics extending from Mankuki West right into Kabaya, where we're picking some significant ounces at depth. So we think we're sitting on a good structure, and we completing the geophysics, doing 3D target prioritization, so that we'll be much more efficient and focused with our approach, picking the 2-3 targets that would lead our way towards a resource delineation phase in Q4 2021. There's lots on the go, and we're excited about this potential. Next slide, please. So, like highlighted, Roscan was most often associated with the Mankuki South discovery, which shown a lot of good high grades, wide intercepts that sort of drove the market's attention. And we picked up this ground comet, which was between us and Oklo, and we inherited a resource that was about 140,000 ounces, which was drilled just to a maximum depth of about 58. We put 23 holes in here, extended the zone to a depth of about almost 200-meter vertical. It's in better grades at depth, still open. And we think this is actually quite exciting, giving us a second area that we can put some center of gravity on to delineate some resources into our maiden resource profile expected by the end of the year. I'll highlight here that the resource, 140,000 ounces, was calculated using a 1350 gold price, which is low compared to what people use these days for their resource shells. So there's actually room to lift the ounces only on the back of the higher gold price. It was also calculated using an 80% recovery, which was premised on a heap leach processing scenario. This is likely going to be CIL from our thinking. So the recoveries are going to be going up, also giving us a lift in the ounces delineated already. And basically tripling the depth with better grades also gives us some potential to add some ounces here significantly. And we've actually extended the zone, the resource footprint on strike. So this is quite exciting, and we hope the market understands that we don't only have Mankuki South. This is really like the analogy a kid in a candy store. There's lots to go here, and we just have to stay disciplined, focus on the ones that we can build ounces quickly on, and the prioritization exercise that we're going to be completing in February is going to help us outline those, and we'll be communicating to the market clearly which ones are our top targets, and we would not stop the exploration because there's lots to pick up here, but we'll focus more effort and resources on the top targets and build some solid ounces for the market. I appreciate the put ground. So this is a story that is still in the discovery phase, and you well know that's where you have the maximum return in the mining equity, and I think there's more exciting days ahead, so stay tuned.
Hey, thank you there, Nana. Yeah, that market cap, 86 million-ish Canadian, it sort of suggests people are starting to sit up and pay attention. There was a question in the chat page there about your cost per ounce. Can you, what's your feeling on that? Are people really being drawn to West Africa again?
Well, I mean, basically, I think that's the place that you're seeing a lot of low discovery cost per ounce. There's a lot of low-hanging fruits to be picked up there, and the path towards production is not really fraught with a lot of hurdles because mining is a significant GDP of these governments. So they're very cooperative and forthcoming and would help you move the ball forward so that they can get more jobs. And I mean, we are employing more locals, about 150 at the stage, and we've seen a lot of support from the governments so far. So discovery cost has been the lowest in West Africa, and I think it continues to trend that way. And I mean, the majors are making a lot of money right now, but they see very few discoveries, and I don't think they have other places to go but to pay a close attention to that district when they're done stuff.
Thank you for that. Carol and Donally, sorry to jump in there. I think you might have a question there for Nana.
I did. I was curious to know about investors' views on West Africa. And second portion of that is, Nana, given your background, you're widely regarded as being the guy for West Africa on the investment banking side. What is it that you feel the company needs to do in order to attract investors?
Well, I mean, the investment thinking about West Africa, I think, is evolving. There are certain countries that still requires a little bit of hand-holding. But if you look at Mali, for instance, despite the political transition that we had, you could see that a lot of the more advanced companies were still going about their business with no disruptions, reporting very profitable quarters, and people realized that there was really no risk of expropriation of assets, and that gave them some comfort after the knee-jerk reaction. I mean, even the juniors continue. I mean, we personally added rates during that period and continue to go about our business. I think what a lot of people, investors, worry about is the changing of the goalpost, where the governments continuously put their hands out when the gold price starts running, which is not really a West African thing, it's a global thing, where the mining fiscal regimes continue to change. And I would say probably we should expect less of that going forward, because if you look at West Africa and you compare the mining codes, it's sort of a mirror image of each other right now. Those that have tax-free holidays are getting back to sort of a normalized tax incentive package. So you don't really see a lot of wide variations. And I think that is going to reduce that risk and the scare of the fiscal regimes being changed on each other, on them as you put the investment in. But in terms of getting access to skilled labor to advance your project, you have a very robust skilled workforce to tap into. And at the end of the day, it's all about the prospectivity of the land. If you can have some good ounces found with very little discovery cost, that definitely is a value proposition that is continuously attracting majors and investors in that direction.
Well, you got to go where the gold is, don't you? That's another one of these truisms from the mining sector. Keith Spence from Global Mining Capital. Have you a question here for Nana?
Yeah, my question is along the lines that Carolyn mentioned, and I know Nana tried to cover it off quite well. It's the country risk issue, and there is a movement towards low risk jurisdictions like Canada and Australia, and I would say we've looked. I sit on the board of PDAC, and I've seen some numbers that suggest there is I don't want to say an emphasis, but people like West Africa and they like Latin America outside of these two safe jurisdictions. So the question I have, it's particular with your project. Your project is in Mali, and though it is in West Africa, it's in Mali, and Mali is one of the jurisdictions that is a little more unsafe, to put it mildly. And the other question on that is when people look at Africa as a whole, I know you're in West Africa, but recently there are issues in Zambia, and it's not gold, but it's copper, but it's that same sort of relationship with the government moving the goalpost, so to speak, in some respect. How are you trying to mitigate that risk?
Well, I mean, that's a very good question. And I think part of it is getting the education process going to the policymakers so that they understand that it's always better to keep the goalpost fixed to attract a lot of investment than to change the goalpost and then keep a few mines which would outlive the existence, and you don't have a mining industry. And I think basically the word is sort of percolating upstairs, and people are realizing that the moment there are any noises in that direction, you tend to see the impact on equities that are in the region, which impacts the ability to raise capital, which impacts the ability to sustain the operations. And I would say that we're seeing a very good suite of more educated professionals running this ministry. So that message hopefully gets ingrained in their brains, and we don't see any surprises down the road. But it's not typically a West African thing. It's actually a global thing. And I think right now there's even much more of a risk globally, as we've seen the pandemic have a lot of impact on almost everything in the economy. And if the commodity is the only place that you're going to see a boom coming, you'll see the pressures for governments all over trying to ask for a pound of flesh in that direction. So it's not going to be limited to only West Africa. Essentially, in terms of safety and in that regard, we've seen players that have operated in those parts of Mali for multiple decades with no jihadist-related disruptions. And I've been there several times, slept on the camp, not felt threatened at all. So generally, the noise in Mali is concentrated in the northeastern part where they want to break away from the government. And we don't have any business in those parts. And once we stay away from that, I think we sort of relatively safe to conduct our business like our peers have been showing for multiple decades. So I think the best way to look at it is to see what guys have done in the region, and that should give investors some comfort that operating in those parts is just not that scary.
Okay, thanks. Richard, could I just make one quick statement?
Yeah, go right ahead.
Nana, I'm going to give you one of my free advice. It's worth a lot. As an ex-banker, one of the best ways to mitigate that risk is try and get export credit agency involved as one of your equity shareholders, so maybe EDC or one of the agencies in the US. If you have them as a shareholder, even if it's a small pittance, they help to mitigate your risk and argue when there are problems in terms of creeping expropriation.
Keith, if I could thank you very much for that bit of advice there. But listen, we're coming up to the top of the hour. This has just gone so quick, and I've got to say some thank yous. First of all, our two experts on the finance side, Keith Spence from Global Mining Capital in Toronto, and Caroline Donally from Sprott Royalty and Streaming in Houston. Thank you so much for your input today and your questions. And of course, our great speakers today, Mike Power from Silver Range, all the way from the Yukon, Nana Sangmuah from Roscan Gold, a fantastic story there in Mali, and of course, Norman Champigny from Quebec Precious Metals, all the way from Montreal. Thank you very much for the speakers and the panel. What a great Minds and Money 5 at 5 it's been. Thank you very much.
Thank you very much,
you.
Richard. Great show. Thank you.
Very much.